Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, July 17th, 2021. And our top story this week, the instability of stablecoins is unnerving regulators. Well, joining me now to discuss this and a lot more, Mike Dolan is editor-at-large in finance and markets for Reuters News. Mike, it's great to see you. Thanks so much for joining us on the program this morning.
Great to see you too, Jeffrey. I'm happy to be here.
Yeah, it's great to talk with you, and you and the folks at Reuters doing great work to kind of keep us all educated about so many different topics. A recent article that you wrote was around stable coins, and I want to get to that in a minute, but it's stable coins, and it's actually unnerving the regulatory bodies both here in the States, but also abroad. First, let me ask you, can you define what a stable coin is just for our audience and myself?
Well, I think most of your audience will probably be familiar with the cryptocurrency world and Bitcoin and that universe, which has mushroomed over the last few years, particularly since the pandemic rose. A stable coin is also a cryptocurrency, but it purports to guarantee a peg to an existing hard currency, if you like, one of the more traditional currencies. So a typical one, the two biggest, look at one-for-one pegs with the US dollar. So it's a way of allowing people to transact in a cryptocurrency without the sort of price volatility that you typically see in things like Bitcoin or Ether or other ones like that. The interesting bit about them is how, in fact, they do guarantee that one-for-one link, and I guess that was the piece that I was writing, was to what extent are regulators concerned about this world, and indeed what sort of reserves do these companies use to make that pledge to a holder?
Yeah, and thanks for defining that and kind of teeing up the piece. Here in the States, we've seen, and I've been reading in your periodical and others, this has not only drawn the interest of the SEC, the Securities and Exchange Commission here in the U.S., and the Federal Reserve, but other regulatory entities in Europe, Asia, other places really concerned about stablecoin and what it could mean to the overall financial markets. What's your perspective there?
Well, I think to put it in context, I mean, in the last year, the amount of these stable coins issued has risen 18-fold. That's like they're now more than $100 billion worth of stable coins. And the biggest one is one known as Tether, which has been around since 2014, and fast increasing, which is something called the USD coin. And they make up the bulk of that universe, but in total, it's 100 billion. So you can see that for a long time, I think regulators have viewed the crypto world as an interesting space of a lot of innovation, and clearly are intent on making it more transparent. But ultimately, they see it as a world from an investment point of view as caveat emptor. It's you go in there, you buy it, and if it goes to zero, that's your own risk, and as long as it's labeled properly. The thing that's arisen with stable coins is that they kind of grease the wheels of crypto finance, if you like. They're the way in which people kind of come from the traditional world of finance of dollars and euros and pounds into the crypto world, and they allow a certain amount of credit creation and buying and selling going. I think 50% of Bitcoin transactions use Tether as a way to go in and out of the currency. So the regulators are really interested here as to what extent that this world is suddenly the kind of portal between the kind of like a sci-fi portal between the upside down world and the real world.
Doctor Who. Doctor Who. A big fan of Doctor
Who. Stranger Things. And I think this is where the smoking gun is in some respects, because when the sister company of Tether ran into some legal difficulties with the New York State Attorney, there was a settlement at the end of that insisted that Tether, its sister company, should publish the breakdown of the reserves it holds to guarantee the one-for-one exchange rate. And in mid-May, they published that breakdown. And that breakdown, as you can see from the piece, is made up of not dollar cash, as many people might assume, but of commercial paper, of even corporate bonds and precious metals. I think 50% of it is commercial paper. And so Eric Rosengren, the Boston Fed chief, in a recent speech, described this essentially as a risky prime fund, or a risky prime money market fund, holding things that many money market funds, for example, wouldn't be allowed to hold. I mean, long duration assets, precious metals, for example, that they simply would not be allowed in a money market fund right now. And yet it purports to kind of operate on the same sort of, dollar guarantee. So the worry for a lot of people, I think, really is that what if something happened in that world that's now substantially, Tether is 60% of a 100 billion market, that's 60 billion. If half of that's held in commercial paper, that's 30 billion. If they had to liquidate very quickly, would it impact the commercial paper market in which it's holding? And I think the answer to that is most likely. And similarly, if there were a problem in the commercial paper market generally, if like there has been in previous recessions, to what extent would that affect Tether and the holdings of it? So it's like an in-out. This is the route, the portal, as we said, between the existing money markets of the traditional world, where lots of people in your readers and retirement savings and so on held in money market funds, and this could be a source of instability. So that's really where they've come onto this, and this is really where I think the regulators will want to see much more transparency as to what's held to support those promises. Tether, for what it's worth, is committed to publishing quarterly its breakdown of reserves, and there is, I believe, legislation on the table in Congress to look at forcing greater transparency in lots of these issues, although we're not sure exactly where that is at the moment. So we are due to see, compared to what I published in that and what others have revealed and Tether itself has published, we're due an update in the next couple of months as to where it is at the moment.
And I guess last question here, Mike. I mean, current holders of stablecoins. So I know that at least here in the States, I've seen institutional investors, pensions, endowments, larger pools of assets kind of invest in this, small allocations. But in your estimation, just based on your research to write the article, who are we talking about that holds this $100 billion? Is it institutional, or is it people like me and you who trying to get in on the crypto craze?
That's a great question, and my simple, if slightly boring answer is that I don't know, and nobody really knows. And I think this is the heart of the issue. The crypto world is very interesting for all sorts of reasons. You will get people who will evangelize about it and people who will dismiss it. But one of its characteristics, more than anything else, is that it's not terribly clear how transactions happen. There are a whole mix of different exchanges. We don't know exactly where and who holds it. But I would say that if you look at the statistics that some of the crypto exchanges provide, that indeed 50% of Bitcoin transactions are involve Tether on the other side, then you get a sense of people who have already invested in the crypto world. Now, is that institutions? Depends on what you define as an institution. I mean, I spoke recently with the CEO of a crypto firm who said there were all institutions involved in with them, but in fact, he was talking about his family offices, talking about hedge funds. So some of the kind of more speculative parts of the market. I think the idea that pension funds or insurance funds or the bigger institutions like that would be in crypto is still a bit far-fetched. So I would doubt, although can't be sure because it's not clear, but I would doubt that very many of those would be involved directly.
Yeah, well, certainly if you're an investor, whether you're a retail investor or an institutional investor, you should understand, doesn't mean you should understand the product that you're investing in, what it means, how it determines value, and what the long-term objective is of that investment. Mike, we're going to have to leave it there. Great story. Thanks so much for joining us on the program this morning. And we look forward to having you back on the program again very soon.
Thank you.
Thanks, Mike. Great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. On Wednesday, I sat down with Lincoln Financial Group's Sharon Scanlon to learn about the science of the art in providing customer service. Let's take a look.
Well, there's really good news, and then there's some troubling trends that we'll review here today. So the good news is half of participants contributed at least 10% to their retirement plan, and a third contributed 15%. On the other hand, we saw loan and withdrawal activity on a slight uptick from the prior year, where we're seeing 1 in 6 participants, about 17%, took a loan or withdrawal in 2020. And debt has definitely become more of a problem, with 30% of workers taking on significantly more debt. And it's really a tale of two cities, Jeff, where we're seeing this K-shaped recovery from the fallout of the pandemic. 8 in 10 of our surveyants said that they reevaluated some aspect of their life. And it reaffirms that financial wellness is more important now than ever. No, because I think folks can resonate with the concept of financial wellness. Where it differentiates or personalizes to the individual is there are different challenges that they face. So it's really important to build interactive and personalized tools that are data-driven, and to create accountability. And there's also a science behind the art of customer experience that we'll talk about in a little bit. And financial wellness is not just about retirement savings. 86% of employees are interested in help planning for their healthcare expenses in retirement. That's an important part of your retirement income story. So we have a dedicated data marketing analytics team on my customer experience team, and they focus in on data for all of our customers, whether it's the plan sponsor, the participant, and even the financial professionals. And we really began this journey back in 2016, where we needed to drive outcomes for the participant experience. And we implemented reporting to measure the digital connection. So we can track the journey of that individual participant to determine what's working and what isn't working. In addition to that, voice of the customer, it's an iterative process, and we learn a lot through that. We learn about what's working and things that we need to tweak to have a more effective experience. One example early on that we learned through voice of the customer is a feature we've had in place for quite some time called click to contribute. It's like the Staples easy button. And when we first did usability testing, let's say you're at 5%, it had +1, +3, +5, and other. And 88% were going to other, and we couldn't figure it out. So we had a hypothesis and we did the math. So instead of +1, +3, +5, we had 5, 7, and 9. And sure enough, 85% used the easy button and 80% picked the one in the middle. So we know it works. And it's important, not just what our customers say, but actually really going out to the end customer and understand what's going to resonate and how we're going to drive outcomes. It does. And interestingly enough, the employers, they're coming to us. They're demanding those solutions from the retirement plan services market because we're the best equipped to have that financial wellness conversation. But having the employer involved is the most critical part of successful programs. So we get those questions. Well, how can we successfully launch a program? Well, we need you involved. We need your voice in this equation. And then how you engage employees is also through having the employer involved, even having it come out from the employer's email, and then driving them to the tools. And if they have a retirement consultant, driving them to have the ability to set up a meeting right then and there. I can give you some stats on what a successful launch looks like, because when you deal in the online tool space, getting anything 10% or higher is considered extremely successful, double digits in what I call the CX and marketing world. But that's self-service. So you really have to meet the customers where they want to be met. And our research shows that 52% of employers surveyed employees as part of this process. 38% have held employee focus groups to really get that input directly from them for employee engagement. And 32% have conducted a financial wellness assessment. And that is really critical for the program to be effective. And 42% of employees say they don't feel adequately informed about their employer's financial wellness benefits. So it really has to be a strong partnership between the employer and the provider. Yes, definitely. So I talked about you need to first understand who is your customer. So I'll give you an example. We're redesigning the participant experience for the mobile app and the web later this year. And when we came up with our concepts and did usability testing, we actually mirrored our participant base. So we didn't do, for example, 50% female, 50% male, because we have 74% female in our population. And in addition to that, we had to look at really where our age cohorts are. So that's your persona. And then from there, you build out the voice of the customer that I talked about earlier. And you do that multiple times during the process. And that's important. You get the initial voice of the customer, you go back and iterate your designs, and then you go back and do that usability testing. And then we use data and metrics to measure the effectiveness of those programs. But that is a never-ending process. It's iterative and it's constant. Yeah, and it's a good point calling out the artificial intelligence. I mean, that's part of the predictive modeling, right? So we can do all the data cuts we want, but really to follow that journey, you have to follow that customer and what they're actually doing, and then incorporate that feedback from the intelligence and feed it back into that ecosystem where that's part of the science behind the art.
And I also spoke with Well Spouse Association's Laurel Whitman about spousal caregiving. Let's take a look.
Sure. So, yeah, the pandemic for some people actually didn't create a lot of change, right? So a lot of our members rather have actually been isolated in a lot of ways because of the nature of their partner's disease or illness or disability. It can be a really isolating and a lonely experience. And so a lot of people actually found it didn't make a lot of change, but for many people it did, of course. There are certain benefits. Maybe being able to work from home is a benefit for a lot of families. Suddenly they weren't rushing off to work and wondering what was happening back at home. So that could be helpful. But a lot of families, for instance, like my family, couldn't bring in aides anymore. So they immediately went from having help around the house with their partner to not having people there to give them that support that they've become accustomed to. That's right. Yeah, caregiving. So for our members, many of them are doing all of the care themselves. That's very common with spousal caregiving, and it differentiates it from other kinds of caregiving. Our members and families in our situation tend to put in more hours per week on average than other types of caregivers, something on order of 36 on average. For some families like mine, the needs are much higher. My husband needs 24-hour care. He cannot be left alone, and somebody has to provide that. I'm very fortunate that in my situation, I'm able to bring in outside care again, at least prior to the pandemic, and now as the world is starting to open up a little bit again. But for many families, that's not the case. They're doing this kind of care themselves. Maybe they're getting some assistance from family members, children, parents, friends, but it's not a given that those relationships allow for that kind of care. And a lot of this care is very personal, right? We're talking about things like changing diapers and specialized medical care. It's not something that everyone can get comfortable with, either as from the caregiving side or from the patient side. Yeah, great questions. And thank you for asking them. We are working on awareness. We want to be the place that people go when they find themselves in a situation where they are caring for a partner, whatever that degree is. And talking about the language a little bit that we use. So obviously the name of our organization is the Well Spouse Association. We use well spouse as kind of shorthand for, to distinguish us from the partner that has the illness or the disability, but it doesn't mean that we ourselves are completely healthy either. We also use the term spousal caregivers. I'll use that interchangeably. And that can be a little bit of a tricky term, right, when we talk about caregiving, because a lot of people don't self-identify as caregivers. They may feel, they're going to 2 or 3 doctor's appointments a year with their spouse, and that absolutely qualifies them for some degree of caregiving. And they may not realize the strain that's starting to come with that, some of that work until much later in the course of caregiving. So we use that term interchangeably, but we think it's important that people start to identify in those roles. So well spouse is reaching out to all of those kind of people, right? And we also use the word spouse interchangeably. It's partners. We have a number of LGBTQ members as well. So we are very inclusive, whatever this relationship looks like to you and whatever you call it, we'd like to provide services. At the heart of it, we're about providing support for people in these roles to make their lives a little easier. Absolutely. Yeah, depression and anxiety are very common among people in our situation. That's not limited to the spousal caregiving, but I think it tends to be heightened by the nature of this role. We've talked in recent years, and I think this has gotten accelerated by the pandemic, about things like ambiguous loss, which is the idea that we are facing a lot of losses on this caregiving journey that may not rise to the level of, call it external recognition. The loss of a spouse is very clear, but the moment your spouse has to give up walking and start using a wheelchair or a walker for their own safety, that's one of those losses that we don't have a good way of marking. And it's one that's borne really by the caregiver by themselves. We talk more about complicated grief. How do you grieve a situation when you're in the midst of it, right? When this goes on for years and years, as is the case for many of our members and many caregivers more generally, how do you deal with those losses when you're still on the train? And we're starting to recognize too that there is a PTSD element to a lot of this kind of care. PTSD is not just limited to the trauma of somebody coming back from war, which I think is how we all traditionally think about it. I have trouble now when I go into an ER with my husband and I hear the beeping from the alarms. It takes me right back to an ICU stay he had that was, particularly difficult for both of us. And it makes it hard for me to give care in that moment and to be fully present like I want to be. So the impacts can be very complicated, and, depression and anxiety are super common, but we see a lot of these other kinds of needs to process from our members. And so you're right, the peer support we think is really important with Well Spouse. We have a network of support group meetings, 20 of them that meet each month right now. That number in list is increasing and they spread out across the country. We think that peer support is really important because people who understand what you're going through are probably best positioned to help you and to be a resource and to reduce some of that isolation you're feeling. There are a lot of great resources out there, therapy, social work, clergy members, et cetera. But it's just not the same as coming from somebody who's been in your shoes. And then you get a lot of very practical advice, from people who have done this. It's not a replacement for the medical care your spouse may need, but we've all had the experience of being in a doctor's office for 10 minutes and then you're kind of shuffled out and they go on to the next person. And that's just not enough time for people who have complex medical situations or even straightforward ones that you're dealing with for the first time to really get what you need from those appointments. And our peer support network and resources can help kind of fill in some of those gaps.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, check out today's edition of The Morning Pulse. Don't forget, we're back again tomorrow, this time for BRN Sunday. I'll be joined by members of the media, academia, and financial services. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.